Hey, everybody, this is Phil Town.
And this is Danielle Town.
Oh, yeah, she's right there. Danielle
She's right
Town.
there. Yeah.
Broadcasting from where? Not
From,
Zurich, Switzerland.
No, from somewhere in America, which is super exciting. I finally got to come home for, how long has it been? 3 years? For 3 years, I've been saying, as soon as I have the energy where I feel like I can actually like physically make the trip, I will make it home. And
you did.
And I did, and it's just been the greatest. And I managed to do the trip, and it took a bunch of recovery, but it was okay.
And you're somewhere in America.
I'm somewhere
I
in
like
America.
that. Somewhere in America. Oh.
I'm gonna keep it vague.
Okay.
And
I'm somewhere in America. I'm in my office in America. That's where I am. So we left off last time.
And we got to be together, Dad.
Place. Oh, we did. We actually put up a couple of Vault podcasts because we have been playing in the snow. Uh-oh,
Yeah.
that's identifying a little more.
Oh gosh.
We were at Big Sky. It was great. I got to say a big shout out to Big Sky. Their whole what do we call that? The guys who rescue you on the mountain.
The ski patrol.
Yeah. The whole ski patrol guys, the whole first aid guys, they were fabulous. They went up and got Austin off the mountain really, really nicely after he crashed and thought he really tore his shoulder up.
Austin, one of your analysts.
One of my analysts. And
yeah.
They did a great job. This guy is a supremely excellent snowboarder. He grew up at Whitefish, which is a ski area. He's been snowboarding his whole life and has never injured himself more than just normal pings and dings when you're snowboarding. And he got smacked down, like happens when you're on a snowboard. You basically go from a back edge to a front edge, and you don't want to be flat. You don't want the board to be flat. And he was in about 5 inches of powder, flattened the board out to turn. It's a very quick move, and he caught the downhill edge. And it is, I want to say literally because it's not literally, but I want to say literally, it is as if a giant picks you up by the feet and slams you into the mountain. Is what it feels like.
Yes.
It's so quick.
And you never saw the giant coming. It's an invisible giant.
It's an invisible giant. And it's just like so fast. You don't even have time to reach your arms out. I mean, it is the quickest crash. And man, he really messed up his collarbone, and he's going to be all right.
I'm so sorry about that.
Yeah, I felt bad for him.
It's just painful. I mean, this is an investing show, and we will get to investing. But general PSA, just because I was talking to a friend about this right before I came home. There are these new helmets that have it's called like BIPs or MIPS. And they are so much safer than the old kind of helmet. And she like got one for Christmas for bike riding. And it's one of those things where it's like, oh, yay, a helmet, I'll never use this. I mean, I wear one, but like, whatever.
Yeah.
And like literally the next time she rode her bike out, she hit like a crack or something on the sidewalk, head over heels, straight onto that brand new helmet.
Ooh.
And was totally fine. Isn't that just one of those tales where you're like,
I'll tell you, man,
yeah, it happens.
Amazing. It is amazing.
And I said, I'm not snowboarding yet. Like, I don't have the energy to do it yet. But like once I get back, I need a new helmet that has that for sure. Because what that reminds me of is, that catching an edge. Like, I'll never forget in my whole life, the first time I think when we learned to snowboard together, and you forced me to wear a helmet, which was like 30 years ago or something. It was like right when people sort of started to wear helmets. Like it wasn't a thing for a long time. And then there sort of started to be like general consensus that you probably should wear a helmet. And I really didn't want to because I thought it wasn't cool. And I was 16. And you forced me to wear a helmet. And that first day that I had that helmet, I'll never forget it. We were on a flat cat track, and I caught an edge just like that. And I landed straight on the back of my head on that helmet. And if I hadn't had that helmet, I definitely would have
I
had a
remember.
really bad concussion. But because of it, I was only sort of stunned for a little bit. But it's one of those things where it's like such a shock and you hit so hard that I remember to this day exactly that feeling of just sort of going like, what just happened to me? Oh my God. So get a helmet. That's my PSA. You can get the new kind of helmet because they're worth the money if you fall. It's
I
cheaper
think
than
these
hospital
MIPS
bills.
helmet, which a MIPS helmet is I forget what the acronym stands for. It's like multi-directional impact protection, something like that.
I
And
just realized I'm still wearing my hair in my like morning outfit here.
you look really
Oh,
good.
well, no, okay, whatever. Hi guys, I
So
haven't brushed my
back to
hair.
my point before
Sorry.
I
I just
launched into
realized
this
that I looked,
narcissistic behavior.
yeah, it's incredibly narcissistic.
It's all about me. We're actually in the middle of a podcast here.
Yeah, okay, go ahead.
And I was actually in the middle of a sentence.
I know,
We're
but I just realized that I looked like somebody who just got out of bed, and that is
done. We're
accurate.
done with the hair now.
Okay, good.
So the MIPS helmet is, I believe, started in the riding world. At least that's the first I saw them. And Melissa and
Like
I
horseback riding.
Yeah, horseback riding. And it protects you if you come off a horse and the horse steps on your head. It protects you better
Geez.
than a helmet that's just locked in because it moves. The inner lining will move. And it's likely you'll have less injury. And they found out that's the case. And now Bell Helmets has MIPS for riding motorcycles. And I guess it's gonna be everywhere, which means maybe I don't know if my crash helmet for racing is going to take up the MIPS
Oh,
ban.
yeah. It
Hard
is
to
everywhere.
say.
Nuno just got a new cycling helmet and it had the MIPS.
And
And
it's MIPS. Yeah, it's going
and
everywhere.
he immediately said, we have to make sure you get one of these before you start riding a bike again.
Yeah.
So, yeah.
And
Okay.
so point being that, I mean, you immediately when I see something like this as an innovation, then I want to know who owns it.
Yeah.
How can I invest in it?
That's my favorite part of this whole thing.
I know. So you take it, the way I go about it is I take a look at, a helmet maker because they're pretty well known, right? So I've used a lot of Bell helmets in my day. So I just Google Bell helmet MIPS, and sure enough, they have MIPS helmets. And then I go, who owns Bell helmets? And what comes back is Vista Outdoor. And Vista Outdoor is a spinoff originally from Smith & Wesson, where they broke the company into two pieces. One piece is weapons, Smith & Wesson, and the other piece, Vista Outdoors, has all their outdoor equipment. And
Cool.
I think both groups have done better as a result of that. Vista Outdoors.
When you say
very
they
public.
spun it off, do you mean now they're fully different companies with different stocks?
Yeah.
Okay.
Yeah. Okay, so now going to Vista Outdoor, let's just take a look at it here. Going right onto the website, clicking on Vista Outdoors, it's a public company, so you're almost always going to see a menu item that says investors, and I'm clicking on that right now. And then what it says is our brands and why invest, and the all-important ESG BS, and no opinion about that at all.
I'm just going to leave that
alone.
alone.
Then if I want to look at the financials or events, I'll either look at the financials and go to the annual report or go to events and presentations, which is the other way to go. I think I tend to go to the annual reports more often. And archive report, annual 2021 report. So I'm going to click on that. And it's so incredible. Everything just downloads super fast. And now I've got the annual report. You guys have no idea how long it used to take this 40 years ago. This was just like, I think I'll find out who does these new helmets. Let me see. What library should I drive to?
Right. And then you drive to your local library and it's tiny and doesn't have the info probably.
Right. So, that didn't work. I got to drive to the university library. So I drive to that library.
Which is an hour and a half away.
Go to Value Line and try to pull down the Value Line reports on it. And since you don't know, there's only, I don't know, 6,000 companies to look through to figure out which one has a new helmet style. Which, how would you even, right? But it breaks it in. So you get to the section of the reports that is just about outdoor. All right, this is a miracle, is what I'm saying, really here.
It is.
Okay,
It really is.
Miracle. Looking
and
down
for
here,
people like me who are new to it and didn't go through all of that, even for me, it's a miracle. Like it feels like this wealth of information to the point of being overwhelming. Like so many people ask me where to start because you can start anywhere. And so it's like, it's there, but now we have a different problem of like, how do you discern what to do exactly? So I love going through stuff like this. Like, here's what you do.
Yep. So I'm just looking at the annual report, and lo and behold, the CEO of Vista actually writes a letter. Many CEOs, I've been told by their legal departments, stop writing letters because people will look at them and decide about what to do with the company. And if you've hyped it up, you're in trouble. So I like, if you want to see a good letter, and we've talked about this, go read Warren Buffett's letters, and you'll see what a good CEO says about the companies that he's running, and you'll see how honest he is. And that's what you're looking for, is that kind of integrity. There's always issues that go on. People always make mistakes. And if nobody ever tells you that they're making mistakes, then they're liars.
I was just going to
say, start to worry about them.
I have not read a letter in quite a while that did anything except talk about the amazing successes of that year. Yeah. And it's to the point of being boring. Like that doesn't help me. I can read the successes in the financials and in the rest of the annual report. I would like to know like what you guys tried to do and it didn't really work out, or what you are planning to do that seems ambitious and may not work, or especially what kinds of like long-term plans a CEO has for the company, because that stuff also doesn't really go into the annual report much. So yeah, it's getting frustrating. I don't know if it's because of legal departments though. I think it's because CEOs and companies don't like being held to those kinds of predictions by investors, which, I mean, I get that. That makes sense. Why say it? If you're just going to be asked about it in 5 years and how it didn't work. But I'll tell you why. The reason to do that is to be transparent and candid with people who want to be long-term investors in your company and stick with your company. And so, I mean, if I were a CEO, I would want those kinds of investors, because those are the people who are going to stick with you through the hard times and not just bail out and crater your stock price.
You want to take a look at this guy's letter for a second? I mean, it's quite interesting.
I can't look at it right now because my computer is up here on a very high table. But
let me just tell us about it,
that would be great. Yeah, I'd love to hear it.
Just a couple of high points.
Say again the company so people can look it up.
It's Vista Outdoor.
Okay.
And the CEOs Christopher Metz and Michael Callahan, and they co-signed this letter. And
so there's a co-CEO team?
No, he's just chairman of the board and the CEO. And basically what they're saying is that we really did a great job of navigating COVID. This is the 2021
I want to hear, but I just want to make sure I know who's writing this letter. So it's signed by both the chairman of the board and the CEO, and those are two different people.
Right.
That's unusual. That's unusual.
I know, you don't see that.
You don't usually get a letter from the chairman. It's usually just the CEO.
So here we go. He's basically saying that really in 2021 that they have successfully navigated COVID, and they mitigated their exposure, and they maintained a high level of production and service. They expanded their acquisitions. They purchased Remington ammunition. They purchased a shot producer. They did a bunch of buying. And our corporate culture is stronger than ever. I love these things. Our employees come to work each day with a renewed sense of purpose and desire to keep winning. I mean, I'm sorry, Chris,
God.
but that's
I mean,
absolute
that's
BS.
such BS.
Just on the surface of it.
Like, who
Your
puts that
employees all
stuff
don't
in?
do that.
No.
Forbes, however, did vote them one of the best mid-size employers in 21, voted anonymously by their employees. So
that's
there's
good.
some good spirit there.
But say that, you know what I mean? Forbes voted us, or our employees anonymously voted us a great company to work at, and we're really proud of that. Not like our employees come to work so excited every day.
Then they're starting to highlight their fabulous ESG, and they're being very politically correct about that.
Or they actually care. Let's not be too cynical about it.
Well, they are an outdoors company, so they legitimately probably do care. They had maybe the best year they've ever had in 2021 because a lot of people were outside due to COVID. So they're kind of highlighting all these new financial records and big margin improvement and all the factors that contributed to their success. And then, because what's going to happen, of course, they don't know that's the end of 2021 for sure, but one would guess that as the pandemic recedes, there will be less outdoor buying related stuff. So they're probably going to see their numbers shrink in 2022. No, they're not. What they're saying instead is the strategy for the future, relentlessly focused on the following 5 strategic pillars. Okay, so here goes the wish list. You ready? These kind of things are not great for CEOs to do. Talent and culture. Okay, so we're going to invest in talent. Great. And culture, which is going to include diversity and inclusion. So talent, diversity, and inclusion. Very good. And then organic
is it
growth.
just like we want to do that, or is he saying specific things?
We're relentlessly focused on following our 5 strategic pillars. This is what they want to do. This is all aspirational.
So it's just vague. Okay.
Yeah. We're going to allocate capital to our brands to do organic growth and leverage and expand our distribution channels. And then we're building centers of excellence, shared resources, expertise to scale, operational excellence to e-commerce, acquisition targets, acquire complementary businesses, and maintain really conservative balance sheet with healthy margins. So these are all aspirational. These are the things they're targeting doing. And then we're excited for the future. And all of our people and our strategy and our brands and our competitive strengths that are going to fuel our success, serving millions of new outdoor enthusiasts. I just wonder what they're going to say when their sales drop like a brick in 2022. I can't wait to hear.
Yeah.
The future is bright for Vista Outdoors. We look forward to continuing the journey. So nothing went wrong. They had no problems that anybody needed to know about, even though there was a pandemic going on. That was amazing. They're just freaking perfect.
And they foresee no problems.
Yeah, foresee no problems.
We're just going to focus on our talent.
Yeah. You guys should honestly, I just want to say, look, guys, grow up, okay? You all you're doing is you're talking to the also juvenile delinquents who are running most of the mutual funds out there on Wall Street. And you're just saying, okay, we're going to continue doing great things. And they're going to read this and they're going to go, oh yeah, more corporate BS. And then you're going to have a year that's nothing like 2021, probably. I'm guessing, but I'm going to make a wild guess that 2022 has been a bit sobering for Vista Outdoors. Let me take a look at their balance or their stock chart. That's the next thing I would do. So what you're listening to is me just doing this real time.
I like this.
I'm going to go to Vista.
So you check the letter, and then do you go look at their stock chart, or you go look at their financial performance?
Either one.
Because that's what I
case,
always debate on.
Yeah, I just went straight to the stock chart, and sure enough, by the end of 2021, December 31st, they hit their high peak of 46.83, and then the stock cratered down to $23.
Wow.
So now I wonder what he's got to say and why he didn't see that coming. I mean, that's just...
Is that the most recent letter, or is there another letter?
No, that's the most recent letter.
Oh.
Of course, we're already finished 2022, so the new letter is going to come out where he will ignore the fact that he did not discuss at all that the company was going to have significant changes in production and
Oh, yeah.
revenue and all these things.
It's going to
So the
be,
stock got cut in
well,
half.
obviously, due to the end of the pandemic, things changed and we couldn't do anything about
We
that.
had
So
no
this was
idea.
all expected.
Yeah.
And we're just, going to keep on doing the great things that we've been doing. And our
We're,
stock
we're
price
being
is going to
pretty snarky
rebound.
here. We are being pretty snarky because maybe these guys are great guys, and I'm sure they are. Often people who are really good people end up running companies. It doesn't mean they're great administrators and great allocators of capital. Doesn't mean that they're willing to be honest with us and tell us what their problems are, even though we own the company. Being nice guys doesn't mean they'll do any of that. And the
Yeah,
reason we're being
this is no
snarky
comment
about this
on
letter is that we've
personal
read so
stuff.
many letters like this over 40 years of just corporate BS is all it is. It's just, oh, we're doing so great, and everyone at the company loves working there and loves us,
Oh,
and it's just all wonderful.
I have a
And
question,
here
Dad.
they say one word: despite the pandemic-related supply chain and distribution challenges, the people at Vista Outdoor rose to the occasion, building, shipping, selling more products to more people than ever before, and recording the most profitable year. So they've got the challenges, and those challenges are affecting them in 2022. And they didn't bother to tell us about why those are there. So I don't know. It's just, if you read this letter, wouldn't you think you'd just run out and buy the stock? I mean, look at these guys are setting all kinds of records, and they're just doing fantastic, and nothing's wrong, and there's nothing bad to talk about. So you just run out and buy the stock. And if you did that, you'd have lost half your money. So that's what we don't like about it. It's just corporate cheerleading rather than what it should be, which is an explanation for the shareholder to understand what's going on in the company in the future. Anyway.
As you have been reading these letters for 40 years, as you just said, have you seen a change in the tone, in the PR aspect of it? Like, did they used to be more about reality in the past?
There were more CEOs, more about the reality in the past, although this idea of corporate cheerleading has been around forever, as you can imagine, because so many of the CEOs in large companies have just worked their way to the top by being politically astute as opposed to, brilliant. And, but what I've seen, the biggest change I've seen is less and less letters are being written.
That is true.
Which goes hand in hand with less and less companies going public. Right now, I mean, compared to just 15 years ago, I think we have half the number of companies public that we used to have. So there's been a major sea change as a result of increased regulation, increased concern by CEOs and CFOs that they could go to jail for signing the wrong document, making the wrong statement.
That doesn't seem like a bad thing to me.
Sarbanes-Oxley was a great disclosure document. We really love Sarbanes-Oxley in the sense that we get information more readily than we used to, and they leveled the playing field. But the fact is, those sorts of regulations can be onerous for a lot of companies, and they just don't want to do it. So
Totally.
that and the rise of a tremendous wave of additional private capital. Like, this way better than I do. You worked in the field as an attorney. So, that's what's really changed the world. Now, probably half the companies that would have gone public haven't. They're just going for private capital.
I don't know if that bothers me so much. I mean, I think it's kind of a good carrot and stick. Like, the carrot of going public is a massive amount of investment influx that a company could really use to grow. The stick of the problem is carrot and the stick the right analogy? Probably not. Anyway, the bad part of it is is that you're under all these reporting regulations, as you said, and the CEO and the CFO have genuine jeopardy that didn't used to exist. And obviously, the reason that exists is that a lot of CEOs and CFOs scammed investors for a long time. So,
Yeah, in varying ways. It's like you get the big scams like Enron, but you've got the little ones. Like, I mean, no offense, Chris Metz and Michael Callahan, but when you don't disclose to the owners of the business the issues that you're facing, you're running a little bit of a scam. Now, maybe I'm
well,
reading
let's
a
be
letter
fair
here
about that,
has
because
no
maybe
reason to do anything except say good things. Maybe they just had that kind of year.
exactly.
Possibly.
But also, like, maybe those things are actually in the annual report, because the letter, as you said, is not required and has no regulatory oversight or bearing, except that they probably shouldn't lie about their company. Um, so yeah, the fact that somebody doesn't put negative stuff in there, to me, is not scammy. It's just shady. It's just like, what's the word I'm thinking of? It's like you can lie by omission. Like, actually, in the law, you can lie by omission and you can be held culpable for lying by omission, meaning you didn't say something that should have been said. And I do think that while these letters don't rise to that level, they're close sometimes. They're close. And even though maybe that information about, bad sales or supply chain problems, are in the annual report, as they are regulatorily required to be, they can be hard to find, and they know how to bury them pretty well. So for individual investors who are doing this off their sofa, um, it makes it harder to suss those things out. And that's where I think the stuff I've learned from you is so important, like looking at the return on invested capital numbers and looking at how they're choosing to allocate their capital in terms of growth, are really key to try to understand not what they're
Yeah,
saying, but
for
what they're
sure.
actually doing.
So kind of going deeper here, I dug into the financials a bit to see what's going on recently. And
Just
they're,
now, in the last 2 minutes.
yeah. So it's really
I mean,
quick. I mean, you just,
can I just say, like, you're amazing at this.
you could
I
all be
can't do
amazing.
that
It's
yet.
not rocket science.
I've gotten a
It's
lot
just knowing where
faster,
to look.
but I'm not that fast. It's
It's,
wild.
it's pretty fast. So what they've done is they saw this peak of operating cash flow. I always like to look at cash flow because that really tells a better story, I think. So they hit at 345 million in operating cash flow, and then this last year they hit 318, and that would account for the stock starting to slide, right? As soon as there's a bad growth story, then immediately you see the stock slide. And their capital expenditures went up substantially, so they've been fixing a lot of stuff. And taxes went through the roof. So anyway, at the end of the day, they saw earnings going well. Actually, at the end of the day, their earnings went up. Wow, how did they pull that? Oh, wow. They are. I have to dig deeper in their financials. It looks to me like they're getting a huge benefit from taxes. Like they're basically putting in a positive number for taxes, as in they got paid back 147 billion. We'll have to look into that deeper.
I have a question about the letter and what to go, but I think we need to wrap up for this episode. So let me just recap.
Real quick.
Oh, okay, go ahead.
Let me just say real quick that net incomes looks really good, but it looks good for maybe a bad reason. And at the end of the day, their free cash flow, which is what they have available to go spend on other companies or to distribute to the shareholders, dropped about 30%, maybe something like that.
Oh, that's a lot. Wow.
Yeah, that's a big one. So it's interesting, I'm real interested to hear what the next letter has to say, because they can really hype up this net income number that isn't real. There's some not that it's not real. It's a real number. It's not illegal, but you have to look deeper on some of these companies to understand what's really going on. And just sort of a tip to the wise, the key thing to look at is free cash flow, see how much free cash flow is coming through, and operating cash flow, and ultimately owner earnings is what we really want to see, which isn't even a GAAP financial. It's just something we sort of learned from Warren Buffett about how you look at a company. And we've talked about it here. And in the book InvestED, we wrote about it extensively. So if you want to learn more about it, go there. Okay.
Yeah, we also
so that's
did
a quick view of Vista Outdoor. And it might be worth looking at. I mean, their stock came off a huge amount, by the way. So I'm going to look at it.
We also did a whole episode, well, I want to say maybe a year ago or something, which is like all about owner earnings and some updated, easier ways to do it. So yeah, go back and listen to that one too. But what I wanted to say is just for me, like what keeps me coming back to investing, and I think, gosh, sorry, I keep getting stuffed up. And I think what got me like so into it in the beginning was doing exactly what you did just now in the last 28 minutes. Something cool in life, something new. Hey, there's a new helmet thing, where before you're an investor, you go like, that's cool, move on.
Where do I find a helmet?
Yeah, or like yeah, right. But now with like the investor brain, it's immediately like, cool. Who owns that? Did somebody patent that? Do all helmet companies have that? Who's selling the most of them? And then you go and it becomes this fascinating detective project, which does not take a long time. And it's so much fun to look behind the curtain, thanks to the internet. As you were saying, it's so easy now, and just go back and be like, MIPS helmets. Oh, here's a helmet brand. Hey, it's the one that I bought. Maybe they're good helmets because I chose them. I'll read about them. Oh, look, it's an entire company. Look, they're public. Okay, let me check them out. Oh, fascinating. Like, I'll read the letter. Oh, the letter kind of sucks. Not into it. Oh, let me look at the financials. Oh, that's kind of interesting. I think I might spend more time on this. Period. Like, that's a great half hour on a Saturday morning.
It's so fun.
I love it. It's just so fun. Exactly.
And we've landed at Vista Outdoor. And if we can figure out what it's worth, just 2 more seconds.
Please.
I just want to take a really, really gut look at what maybe it's worth.
And by the way, I'm not as speedy as you. So for those of us who are a little bit newer at this, it might take a little bit longer. But that does not make it any less fun. And for me, actually, I think it makes it more fun because it's a constant journey of discovery and learning. And it's been really fun for me to notice how much faster I've gotten as I've integrated the practice and been able to just start to do things automatically instead of having to like look at my checklist every single time.
Wow. I think, let's see, let me just change one number here. Recalculate. I think this thing might be on sale.
I do get nervous at these quick snap valuations.
This is just not even an opinion. It's just a first level windage view of this.
Okay.
That says, yeah, although they're somehow adding a lot to their earnings by virtue of taxes that they're not only not paying, but they're getting paid back on in some kind of way. Owner earnings look pretty great, actually. And if the stock is at $28, it very well could be around a 10 cap on this thing. So if you want to take a look at and invest it in kind of, could be better than a 10 cap.
That is now, of course, incredibly unusual.
There'll be a reason. I'm also looking at one of the things we do for an analysis and seeing that using the parameters that I'm using right now, this company has been on sale a lot. Never as much as it is right now, but a lot. So there's a lot of things to not like about this as far as Wall Street's concerned. And that you'll have to figure out before you could buy it, right? You need to understand why they don't like it better than they know. But right now, it looks more on sale than it ever has. So
Vista Outdoor.
Let's take another dive into that next week. You want to?
All right. Yeah, totally.
Yeah. All right, cool.
Until
then.
Find things you love. Find the companies that make them. It's the best.
Yeah, it's fun.
Okay. Thanks, everybody.
Time to go play. See ya. Hi guys, thanks for listening to InvestED. If you enjoyed this episode and you want more information or to listen to additional episodes, visit our website at investedpodcast.com and sign up for my virtual workshop right there. Spots are definitely limited for this event. I'm not kidding, they really are. They sell out very quickly. So everything discussed on this podcast, by the way, is either my opinion or it's Danielle's opinion. And really important, it's not to be taken as investing advice because I am not your financial advisor, nor have I considered your personal situation as your fiduciary. So remember that. You're on your own here. This podcast is for your entertainment and education only, and I really hope you enjoyed it.